Looking for some dividend stocks that are on sale? Today I'm going over 4 different dividend stocks that are at their 52-week low and ones that you may just want to add to your watch list or even your portfolio. And if you're here and on my channel, I'll discuss investing in stocks, ETFs, all with the goal of inspiring you to start growing your wealth. Let's jump into Seeking Alpha to look at the first stock. Starting off with Stanley Black & Decker, ticker symbol SWK. And Stanley Black & Decker basically manufactures hand and power tools, and the company basically operates with power tools, storage, security, and industrial. Their largest segment of revenues coming from their tools and storage. Current share price of Stanley Black & Decker is $140.32. For the past year, the stock has fallen 30%, and within the last month has fallen 5.63%. Going over here to its 52-week range, you can see it is close to its 52-week low, which is $136.62, and its PE value is 11.62. Jumping out to growth, we can see that Seeking Alpha gives its revenue growth a grade of B-, and it is at 11.84%, which is about 16.5% greater than the rest of its sector. And down here at its long-term growth, we have it at 11.3%, which is about 10% below the rest of its sector. Moving over to the validation, so its PE, as we looked at, is 11.62, and Seeking Alpha gives it a grade of B-, and that is about 32.5% less than the rest of its sector. Going down here to its PEG, and PEG is your PE value divided by the growth that we just looked at, and we have it here at 1.03, and that is about 26% less than the rest of the sector. And what's good about PEG is you want to have it close to 1, being a fair value. If it's below 1, it may be seen as undervalued, and if it's greater than 1, it'll be seen as potentially overvalued. One last thing we want to look at here is the price to cash flow. So right now it is at 5.9, which is about 56 less than the rest of its sector. And you want this to be a low value. So the price to cash flow basically is you're paying $5.90 for every future dollar of cash flow that the company will receive. So you do want that to be a low number to get more bang for your buck. And over here at the dividend yield, trailing dividend yield is 2.19%, which is about 48% greater than the rest of its sector. And speaking of dividends, let's jump to that. Over here, the dividend summary. So the future dividend yield is 2.25%, and that'll give you annual payout of $3.16. And Stanley Black & Decker payout ratio is about 26%. For the last 5 years, it's been growing that dividend at the rate of 6.04%, and it has been growing their dividend for the last 53 years. So that makes it a dividend king. Last thing we're going to look at is the Wall Street rating. Analysts are rating it right now as a buy at 3.89. And scroll down here, you can see what its price target is. So right now the current share price is 140, and their lowest is, they see it as 145, and their average is going to be 190 with the high of 250. So right now it is below what their low average is, so it is perceived from the analysts as a stock on sale. Moving on to our second stock, AOS Smith Corporation, ticker symbol AOS. AOS Smith Corporation manufactures and markets lines of water heaters for both residential and commercial, and they also have supplementary products for water heaters and boilers and different water system tanks. The current share price of AOS Smith Corporation is $36.79. You can see here for the last year has fallen about 5.58%, and within the last month has fallen 5.14%. Going over here to its 52-week range, it is close to its 52-week low, which is at $60.39, and its PE is 17.97. Moving on to its growth. So Seeking Alpha gives it revenue growth a grade of B, and it is at 13.52%, which is about 33% greater than the rest of its sector. And at this time right now, we don't have a value for the long-term growth. So let's move on to validation. So over here, Seeking Alpha gives their PE ratio a grade of C+, and it's at 17.97, which is about 4.43% higher than the rest of its sector. Scroll down here, since we don't have the forward PEG, we'll look at the trailing one, which is at 0.5, which is about 25% higher than the rest of the sector. And scroll down here, we'll look at price to book, which price to book basically is the current share price divided by the assets on his balance sheet. So you do want this close to value 1. So for A.O. Smith Corporation, it is at 5.47, which is about 110% greater than the rest of its sector. Right down here, we can see dividend yield compared to its sector. So it's about 14.63% higher than its rest of its sector. And for dividend summary right now, the forward dividend yield is going to be 1.76%, and that'll give you an annual payout of around $1.12. And the payout ratio is 35.1%. And for the last 5 years, the growth rate has been 16.65%. And it's been growing that dividend for the last 10 years. So the Wall Street analysts rate this stock as a buy at a rate of 3.57. Scrolling down here, we can see that the price target is low, around $59, and right now the current share price is around 63. So the mid-range is going to be 81 from what the analysts say. Before moving on to the third stock, if you found value in this video, let me know by smashing the like button. Next two stocks I'm going over are both in my dividend portfolio. So this one right here I'm showing is Bank of America, ticker symbol BAC. Bank of America, one of the largest financial institutions in the United States, has more than 2.5 trillion different assets, and they're organized into different sectors of banking, and investment management, and global banking. Current share price of Bank of America is $37.57. And down here you can see for the past year it has fallen about 3%, and within the past month has fallen 11.52%. So going over to its 52-week range, we have it close to its 52-week low at $36.51. And down here its PE is 11.51. Looking at its growth, currently for its forward growth, Seeking Alpha gives it a grade of C. So it's at 5.88%, which is about 16% less than the rest of its sector. On the valuation for its PE, Seeking Alpha gives it a grade of C as well, and that is at 11.51, and that is about 5.3% greater than the rest of its sector. Scrolling down here, we can look at its PG is at 1.6, which is about 55% greater than the rest of its sector. And scroll down here, we want to look at price to book, and they have it here as 1.18, which is about 8% higher than the rest of its sector. And once again, you do want this close to or below 1. And down here, its trailing dividend yield compared to the rest of its sector is at 21% less than the rest of its sector. Forward dividend yield is 2.24%, and that'll roughly give you a payout of 84 cents annually. Its payout ratio is 21.91%, and the growth rate for the last 5 years has been 24%, and it's been growing that dividend for the last 8 years. Wall Street categorized this dividend as a buy, and it's at a rate of 4. Scrolling down here, we can see the price target. Analysts give it a low price of $40, so right now it's at $37, and the mid-range is around $49. So we do have it below that range right there. The last stock I'm going to go over today is Starbucks, ticker symbol SBUX. Starbucks, as you mainly know, is one of the largest recognized restaurant brands throughout the world, and it has more than 34,000 stores across 80 different companies. The current share price of Starbucks is $79.50. For the last year, it has fallen 31.85%, and within the last month, it has fallen 9.11%. Going over to its 52-week range, we can see that it is pretty much at its low, which is $78.92, and its current PE is at 24.05. Seeking Alpha gives it revenue growth a grade of C+, and it is at 14.94%, which is about 2% higher than the rest of the sector. Down here is the long-term growth is at 11.14%, which is about 25.71% less than the rest of the sector. Over on valuation, Seeking Alpha gives it P a grade of D, it is at 24, which is about 94.1% higher than the rest of its sector. So it's pretty much kind of double. If we go down here to the PEG, it is at 2.16, which is 125% higher than the rest of its sector. So it could be seen as being overvalued even since it's at its 52-week low. Scrolling down here, we see its price to cash flow is at 17.99, which is about 77% higher than the rest of its sector. And its dividend yield is at about 23% higher than the rest of its sector. Over here, looking at its forward dividend yield, will be at 2.47%, and its annual payout is around $1.96, and the payout from the company is 56.12%. For the last 5 years, it's been growing that dividend at 15.87%, and it's been growing that dividend for the last 11 years. Wall Street analysts categorize SBUX as a buy at a rate of 3.76. Scroll down here, we see that they give a low price of $87, so we're about $7 less than that, and an average price of $108. So that wraps up the 4 stocks that I wanted to share that are at its 52-week low. Leave me down in the comments if you have any of these stocks on your watch list or in your portfolio. As I mentioned, I have Bank of America and SBUX in my dividend portfolio, and if you enjoyed this video and want to see other stocks that I have in my portfolio, I'll share that video on the end screen over here. And once again, if you found value in this, let me know by smashing the like button, and I'll catch you in the next one. Peace.